All right, everyone. Hey, and on today's episode, we have Mr. MC Laubscher, who is a husband, father, entrepreneur, investor, also an author, and thankfully, he's an educator. And he's here today to talk to us a little bit about how we might become cash flow ninjas like him. MC, welcome. Glad to have you on here finally.
Awesome to be here. Been looking forward to our conversation.
Yeah, definitely. So tell us, 30-second version. Who you are and what do you do?
Yeah, originally from South Africa, came to the US in 2001, believe it or not. Time flies when you're having fun. So a backpack, a suitcase, $500, a sense of humor and a sense of adventure. And saw the incredible opportunity that existed in this country. I played sports here up until 2007 in a national rugby league. And while I was doing that, I started my journey as an investor, and then eventually started a couple of companies. Most folks are familiar now with some of them if they've heard of anything that I've done. They've heard of Cashflow Ninja, which was a podcast that I started in 2016. It started just as a kind of like a passion project, really, but it's now a full-blown education company. We have been downloaded in over 180 countries, which is kind of crazy, millions of times. I've got a company called Producers Wealth where we actually help business owners and investors establish and create their own banking system, which is a cash flow strategy that we also share at the Cashflow Ninja. And then I also have a firm called Producers Capital Partners, where we are involved in a lot of alternative investment projects in real estate, like multifamily and resorts and other exciting niches.
Yeah, man. No, it's been fun even on the side working with you in your primary trade, in these other vehicles. And I'm excited to kind of talk about them today, but we won't get super advanced out of the gate. Let's warm everybody up as far as, because you and I both know, there's a big jump from what we're taught about finance, what we should do with our money, 401k, IRA, versus how the wealthy do it.
Yep.
And I know in your podcast, and we'll get to that too, you've had a lot of folks in one, really impressive. I know you've had him on at least once, but Robert Kiyosaki, I think, when you get into this world of discussing wealth, like you almost can't have this conversation without his name coming up, Rich Dad, Poor Dad, because, and like others and myself, it really opens your eyes up to really what we're taught and why, I don't know, like we just don't get ahead because we're just educated to serve a system rather than serve ourselves in a way. But, take me back to this $500 in a backpack. Like, what is that serious? You grabbed your backpack, $500, hopped on a plane, left South Africa, and here you are.
Yep. And I played in a rugby league here up until 2007. That's a great thing about rugby around the world. It's an incredible brotherhood, incredible community. So that's the nice thing about the rugby network is you can literally jump on a plane anywhere and find yourself having some new friends relatively quickly. And plugging into an incredible community. So I did that until 2007, and I used to play in a national league. So we would play in different cities and different towns every weekend. When you're playing sports, people get into really bad. You could get into really good habits or really bad habits on the road, right? You could play video games or you could read books. I was the guy that was reading economics books and finance books and so forth because I did my degree in history and economics in South Africa. And just on a side note, in South Africa too, I grew up during a very interesting time in that country's history, which just think about it for a second. So everything that you've known your entire life, when up until the point when you're like 12 or 13, just all of a sudden everything gets flipped upside down. And you don't know what's the truth, what happened, what's going on. There's uncertainty, there's chaos, there is was at that stage literally, basically, the country was headed towards a civil war, essentially. So it was a very uncertain period, chaotic, disruption, and so forth. So I see it as a real gift to having experienced that as a young man. Because
how old were you when all that's going down?
So Nelson Mandela was released in like 1991, and the election was in 1994. So I was around when he was the election. I was around 13, 14 years old.
So you're old enough to be concerned, right? You're not too young where it's just kind of like over your head. You're kind of starting to come into an adulthood and kind of seeing this chaos and uncertainty unfold around you. So it's a bit disconcerting for sure.
Yeah, and you see also at that stage you just learn by observation, right? You don't necessarily read widely on the news, and online. The online thing wasn't even a thing at that stage, or a possibility for me. So you just observe what other people are experiencing and how everyone's sort of panicking. Inside of your family, the communities. The people that you're going to with school, and then you start to see certain kind of things play out as everybody would see on TV at that stage. So yeah, I mean, it literally it was a gift. I look back at it now and I'm like, that was really a gift very early on in my life, because it shaped my it gave me a different perspective and a different worldview and paradigm to what a lot of folks have, where I realized, the world does not work as advertised. It's actually completely different than as advertised. It allowed me to question everything, which it takes people a very, very long time to start doing that in their life. So I started questioning everything immediately, because I'm like, wait a second. So this group of folks were now completely wrong, but the new folks are now saying this is how everything worked and was. I said, wait a second, how about I just question everything and figure these things out, and see how they really, really worked. And that's kind of the perspective which I then took with me in the rest of my schooling, when I was in high school and in college, and when I got to the United States too. I was always reading widely and reading on different topics and subjects and so forth, and loved reading about economics and history, because throwing those two things together, and then bringing also the financial world into it, those three lenses will give you sort of an idea of what actually happened. Because you could have the economic kind of lens, and that's one lens, and that's just one part of it. You could have the historic lens, and that's just one part of it. But you bring in the financial, history and the financial lens in. Well, now you kind of get a picture of why things happened and how things happened. So I kept on reading widely, as I was saying, just traveling for with sports. And then my mom actually gave me this book, which you mentioned, of Robert Kiyosaki, Rich Dad, Poor Dad. And
so your mom gave it to you
in 97. So she gave it to me. I think I read it the first time around 2001. Yeah, it was 2001. And it just blew me away that what I was kind of feeling in my gut as I was reading very widely on the topic of wealth creation and finance was all put together in a book. And that really was kind of the moment where I realized, wow, there is a completely different game being played here. Most people are unaware of first of all, they're unaware that they're in a game. They're unaware that there's rules to the game and there's players. And you have to understand all these different things to be able to play the game well, which without a choice, you are in. We're living on an economic planet, as Grant Cardone would say, which I've had the privilege of interviewing on my show. So by definition of this economic planet and operating in economies, as all of us do in some way, shape, or form, in a certain capacity, we're part of the game. So that book really opened my eyes, and I took action very, very quickly after reading that book. So within the first 6 months, I bought my first investment property. I paid all of the bills associated with it after I got renters in it and collected the rent check. And at the end of the month, there was money left over. And it was that massive light bulb moment where I'm like, whoa, this is cash flow, like they talked about in the book. And the question became to myself at that stage, how many times can I do this? How many of these units can I own? Because this is definitely the way to do this. And then, of course, the journey of your education starts, a different type of education, right? Because fun fact is, most real estate investor will chuckle when they hear this. Sometimes your tenants don't pay rent. Sometimes they damage things, and so forth. So the education really starts at that stage. And as I was learning more, and I was very, very curious, reaching out to folks. I had a very, very wealthy friend that I met through the rugby network too, which I kind of got an insight of how family offices work. And that just blew my mind too. But I started to research all the different topics that I discovered through him, and the folks that were essentially working in their family office. And, it just led me to this conclusion that there were folks just playing at a very, very high level. I call them Cashflow Ninjas. And essentially, when you want to partner with those Cashflow Ninjas, you're going to have to be a person of value. So you have to bring skills to the table. So developing myself and my skill sets was a priority before that. It's at that stage, it's something that I continually do every single day, and continue to do in my business and as an investor. And I started to realize too that they play at a different level. I was at that stage, I started working for that friend of mine. They owned a ton of multifamily units because I wanted to learn the bigger business of real estate, because I was just playing around with some single family at that stage, right? So I started literally working right at from the ground up for him, boots on the ground, because I was traveling a lot for sports at that stage. So you're not really very employable anywhere if you're traveling and gone for most of the time. Again, at that stage, I realized that it was a decision that I made, but it was actually also a gift, because I started picking up trash basically on these huge multifamily unit properties, to eventually doing construction for him, being part of construction crews, running construction crews for him, doing some property management, doing some leasing, working with contracts, working with suppliers for all of their essentially properties, to eventually managing over 500 units from, and the capacity as a property manager. So it really gave me an insight to the business. And then I got a broker's license at that point. I became part of their acquisitions team. And I remember chasing this one real estate investor because I knew they were sort of in the process of thinking of selling their portfolio of properties. And I was after them for about 6 to 8 months. One early morning, I got into the office at around 7:30, 7:45. And that investor walked out of the broker, which was my friend's partner's office, just sold the entire, portfolio of properties to them. And I sat there, and as a young man, I said, "What just happened here? Wait, this has to be like a learning moment, right? a coachable moment. What can I learn from this?" And I realized that how these guys were playing the game at a different level. They were the Cashflow Ninjas in this space, my friend and his partner. Nobody was going to think about selling anything that they didn't know about. And if they were thinking about it, they were going to contact them first, because they would either buy it cash, or they would flip it to another investor which they knew already. They would know the end buyer already for that, right? Because of their network. And I looked at that and I said, how do you compete with that? You can't really compete with that. How do you partner with that then? Mm-hmm. How do you partner with them? And that was the second light bulb moment of like, how do you do bigger things with these big players? And as I was going through all of this, I started to realize too that there was massive gaps in my own wealth strategy of what I was doing. And I started to get this recurring theme, which comes through the Rich Dad, Poor Dad, Robert Kiyosaki book, which comes through studying family offices, which comes through looking at what the wealthiest individuals in the world are doing. They all essentially have their own banking system. Mm. So I realized at that stage, okay, you can have a business, you can be a great investor, but the glue that puts all this together is essentially creating your own banking system. And by doing that, you stop being a piece on the chessboard, but you essentially create your own little chessboard where you control the game and you control the cash flow. So that was a huge, big light bulb moment for me. And as I stopped playing sports, that was kind of that I knew what I wanted to do, and I knew what I wanted to build businesses. I wanted to build businesses that I'm passionate about, educating and teaching folks. I was doing consulting as I was building some of these businesses too, completing my MBA at that stage in finance. I would say around 2015, things really started to come together in the company Producers Wealth, where we help folks create this banking systems for themselves. And then I wanted to share all these different things that we were learning, all these different cash flow strategies and so forth through Cashflow Ninja. So we started that in 2016, and that essentially then just put rocket fuel on everything else that we were doing. So it's been a fun adventure, fun journey, and it just continues to be fun and interesting. You never know which direction life takes you.
Yeah, no, and I think it's funny as I'm listening to you, and for those folks who haven't, you've heard me mention it before, Rich Dad Poor Dad. One, read the book; it'll change your life, and then pick up Cashflow Quadrant. Like, read the whole stack. I got the whole stack sitting next to me, but it is a mind shift, and even Robert Kiyosaki, and much to your credit, likewise, like it is fun to educate people in these things, because it's such a wake up, So, two things I wanted to get you to go ahead and explain that you said that folks, because some folks are talking about these things that may have never even heard of it before. So, one, I was going to say, it's funny how your story very much mimics the Rich Dad Poor Dad story, which, not to spoil it, but, Robert Kiyosaki, he had his real father who followed the system, quote unquote. And then he had his best friend's father who, like you mentioned with your friend, was playing a different game, and he was really intrigued by that. And, the whole Rich Dad Poor Dad brand is around the lessons learned there. It kind of like you've learned, and now you're kind of bringing to market, which is awesome. But you mentioned, like family office. Could you kind of explain what that means for someone who have never heard that term before? What's a family office?
So it's essentially a private wealth firm that manages the wealth of a particular family. So you get, there's many different structures out there, but essentially it's the concept is based on what the Rockefellers had established. They established this quote unquote Rockefeller family office, this firm that manages the family's money and has all of their advisors under one roof. And when families hit a threshold of like $100 million in net worth, there's now you have a significant wealth, right? And now if you don't have a coordinated team that's all on the same page, all of a sudden mistakes now come with a lot of zeros attached to it. So it's very important to have everybody on the same team, everybody help craft the strategy. And then everybody makes sure that everything is done efficiently. So that's kind of family offices. There's different models and structures now, but most folks think of a family office as the single family office, which is essentially built on the Rockefeller concept. And then there's also different firms now, which is kind of like a plug and play for certain families over a certain net worth. Not obviously up to 100 million, but when they get into when they get to 20, 25, 30, there's certain companies which then allows families like themselves to plug into this family office and have all of their advisors on the same page. It's been fascinating reading up about it, and it's been incredible to study it. And then now I've become really good friends actually with folks working in family offices, and this is what they do. They manage the wealth of these families. And I was actually invited in by my one friend to just sit in on a strategy session the one time because he just wanted to. I was always very curious, and he's like, "You would love this. We're just going to discuss strategy essentially." So I sat in on that, and you know what the most incredible thing is of that my biggest takeaway from that session that I was in is, again, it's the complete opposite of what everyone else is doing. So what does everybody else do? What do they do? Well, they try, let's just say they do even pay themselves, first and 10% of their gross earnings as advised and advocated in The Richest Man in Babylon, which everybody should read as well. Let's just say they do that. So they save 10% of their gross earnings and income, and then they focus on that 10% to double that or make as much money on that 10%, right? And grow that as much as possible, the 10% of their gross income and savings that they put away every single year. So they're so focused just on taking it and trying to multiply it. Now, what do these family offices do? The most incredible thing that I saw was the biggest focus and emphasis was first on defense. Mm-hmm. It was first on protecting against wealth destroyers. And, when you say wealth destroyers, the number one thing that comes to mind is taxes, right? And the tax code, it changes constantly. So they had three folks just focusing on the tax side of this. So they're focusing on defense and trying to figure out how to be as most tax efficient legally as possible. And this friend of mine said to me, when I said, this is incredible, where everybody else is just focusing on hitting home runs, essentially taking that 10% and try to multiply it and try and get as big as return as they can. These folks are focusing on just tax efficiency first. That's the primary driver. And he said, just think about it this way, MC. If we reduce the taxes for this family, or find like a little inefficiency and we tweak it and we save them, 10% on their taxes that year, reduce it even by 10%. There's no return in the marketplace compounding over 10, 15, 20, 30 years that would beat that. There's no return. So, and I looked at him and I said, this is just incredible, because most folks are so focused on investing in the next Snapchat and finding the next Bitcoin and hitting the next home run, where these folks are thinking, multi-generationally. They're like, all right, 10% is this year. That's great. But now let's look at the compound growth of those savings over our generation, the next generation, the following generation. It's just quite incredible. And it's the same thing with market drawdowns, where they're very big on defense. And most folks listening to this that are familiar with sports, we always hear that offense can win you games, but defense wins you championships. And that's kind of the different kind of approach of these, the wealthiest families and folks on the planet. And then, the majority of folks, they're focused on not losing. That's why everybody quotes Warren Buffett too. Rule number 1, don't lose money. Rule number 2, don't forget rule number 1. They're focusing massively on defense. They know that they have more to gain in maximizing and the inefficiencies, like fixing that,
right?
Reducing taxes, not losing cash, and having proper tax strategy, asset protection, and estate planning. They have much more to gain from that than trying to find that next Snapchat. Look, they're very great. They're great with their businesses too, if that's in their wheelhouse, which is the other part that they're focusing on. They focus on defense and then they focus on their business, because they know that, again, there's no bigger return in the marketplace that they'll find than within their own businesses.
Right.
And then they start to invest outside of their businesses to generate cash flow and things that is very, very efficient with cash flow, provides great tax benefits, and then also provides a massive upside potential for them, and allows them to utilize leverage, whether it be human capital or financial capital.
Yeah, and when just kind of thinking the liquidity, right? And there's reasons for these terms, right? Liquidity and what you're kind of describing for those of you trying to get your heads around this, right? If you think about cash and wealth as something liquid, right? In order to preserve that, just think it, you got water flowing into a bucket. That bucket is where you're housing your wealth. And what you're describing is you're plugging the holes in the bucket, right? That's the defense, right? Hey, because no matter how much you're pouring in, if it's all falling out of the bottom, you've got to work twice as hard, 3 times as hard to kind of overflow the offense, right? The income coming in, or it's just going to keep falling out the bottom. So I appreciate what you're saying is that playing defense first is really plugging those holes so that the efforts that you are embarking on offensively or in your investments are even more secure. You're retaining more of it rather than in going out the holes in the bucket. So I think that's awesome.
Yeah, and we kind of instinctively know this, right? Mm-hmm. To use another sport kind of example, with boxing, we know that if you're getting in the boxing ring as a fighter, you're getting yourself the best chance to win and secure a victory by being in the best shape of your life, and also protecting your face and your head, right?
What do you say? Protect yourself at all times. That's the first thing the ref tells you.
Exactly. That's before you've thrown a punch. So you've made sure that everything that you can control, you have control over. And that's a great way to put it, because, if we're going to go somewhere, let's just say our vision is we start, we have this vision for wealth and freedom and sovereignty in our own lives. And we know that this is where we want to go. We set our North Star. And let's just say that's on this little island, and we have to get on a boat to go over to that island. Well, if you have holes in that boat, it doesn't matter how hard you paddle. You're probably going to sink before you get there. So make sure that the boat is, all the leaks are plugged. You have optimized, and everything is efficient, which you have control over. And that's the big thing with these families too, which is the complete opposite of a lot of different folks, right? So if I can share a framework with you, I've literally just put a framework together because I like to simplify things for my own benefit too, just of what I've learned. And one of the frameworks that I've seen over 20 years of just studying what the wealthiest folks are doing, looking at what's happening in family offices, and being just, incredibly blessed to have interviewed incredible people on my show, is the first kind of thing in this framework that they all do is they make capital. They generate capital somehow, right? And to Robert Kiyosaki's book, which is great, Cashflow Quadrant, they either do it as an employee, a self-employed person, a business owner, or an investor. And once that happens, the second step then of this framework is you have to position capital somewhere. It has to reside somewhere. And that's where the liquidity comes in. And this really is where a lot of people struggle, and they get into big, big trouble because they don't have the liquidity, especially business owners and investors, because as folks listening to this and watching this might think about, it's feast or famine sometimes, right? There's a cycle of cash flow in your business. There's a cycle of deals as an investor to invest in. So sometimes you have a lot of cash on the sideline, or a lot of cash coming in as a business owner. And then sometimes in the seasons that cash flows down, you don't. So you have to, float essentially the businesses through that period until the cash flow cycle picks back up. And the same thing as an investor. Sometimes a lot of cash deployed into deals. Otherwise, sometimes you're sitting on a lot of cash. So that's the second part, is capital positioning. And I'll just go through the framework quick, and I'll come back to capital positioning, the second step, because it's so important. The third step is essentially cash flow creation. That's when capital is deployed either back into businesses, which is your number one and greatest return that you'll find anywhere in your own business. And then also in investments that produces cash flow. And then you have to protect essentially everything that you've produced and created as a producer and a creator, that you positioned and that you've deployed into businesses and investments through tax strategy, through asset protection, and through proper estate planning. Now, a lot of folks are really, really good at the capital creation. I see business owners all the time. They absolutely crush it there. They're really, really good at that. A lot of folks are really good at deploying capital in the right opportunities to essentially multiply that capital as a business owner or as an investor. But where the major inefficiencies come in is the positioning of capital. Where do you put the capital until you deploy it, that you can access it easy to grow your business and investments? That was another light bulb moment for me. There was a mentor of mine that said to me, and I went through, a lot of these things that I'm sharing now is, hard. lessons from the school of hard knocks. But he said to me, he said, MC, where do you think is the best place for a business owner and an investor to position their capital? And I was thinking about that for a second, and then he responded and he said, it's where they can access that capital very, very quickly to grow their own business and or to grow their investment portfolio. And again, what is the advice given to most business owners and investors? You know, a lot of folks start building companies, and all of a sudden, it's a very dark place where not a lot of people see you. You're just building and grinding, and eventually the business starts to take off. It becomes profitable, and now all of a sudden, you and the business break the surface. All of a sudden, people start to see what, you know, you've got a great product or a service that provides value to the marketplace, which brings in a ton of capital into that business. And now there's a lot of advisors that then approaches the business owner. And what do they tell that business owner? They say, well, you've done really, really well. We should take some of that capital off the table. We should put it in a diversified portfolio of stocks, bonds, and mutual funds. And what happens at that exact moment? Well, now all of a sudden, where you have invested and reinvested in the business to keep that hockey stick growth curve going of the business, you've now essentially stopped that. You've moved capital away from the business. And we see it a lot with business owners that essentially the business starts to kind of hit the doldrums, right, at that stage. And there is a time and a place where you do have to take some money off the table, still have a plan of reinvesting and keep growing your business, but then just moving some capital into assets, which is preferably hard assets, cash flow assets that produces cash flow, because what that will eventually do for the business owner is it'll replace the income that they were taking from the business anyway. And now all of a sudden they've achieved freedom, essentially financial freedom, which frees up their time, which allows them to choose the relationships that they want to pursue and be a part of, which allows them to freedom of location to go anywhere, and then also just focusing on their purpose. You know, what I've seen in the network that I'm, in multiple networks that I've, and at that point in time where the business owner achieves financial freedom and all those freedoms and experiences that shift, their business multiplies. I mean, in some cases, one of the network that I've seen folks 10x their businesses, because now all of a sudden it's just purpose and passion driven. They're completely out of that scarcity sort of mindset.
Right.
Because they now all of a sudden they know that the security part is done. They're financially secure, financially free. So they can now swing for the fences.
Yeah, they can be more bold. Yeah,
exactly. That is an incredible spot to be in, where you can at that stage collaborate, on a higher level with other business owners. You can swing for the fences and have a lot of fun doing so in the meantime. And the stress is gone. So now all of a sudden, incredible things start to happen.
Yeah, it is. And these are things, and you were mentioning, I guess, back to the liquidity part versus putting your money into cash flowing investments, right? And some of the more Main Street terms you hear, right? Like it's I don't know, I won't even throw names out there, but they're the brokerages calling saying, hey, give your money, put it in the 401k, put it in my mutual fund. But those things, correct me if I'm wrong, are generally inaccessible, right? You're putting your cash assets into another asset that there are penalties for accessing it, versus putting it into opportunities that return cash back to you again, getting that liquidity again, or maybe even back to what you were saying earlier around the banking element, becoming your own bank. The concept that you speak a lot about is just like infinite banking and what that means and where you put your funds. What does that mean, and being your own bank?
Yeah. So essentially this is, again, a framework and a model copied from what family offices do. And what family offices do is they actually leverage life insurance, which is it just blew me away the first time I saw that, because most people think about life insurance and they think, okay, well, somebody buys a life insurance policy and then somebody needs to die and pass away in order for someone else to benefit from it. But essentially what you can do is you can structure life insurance, and more specifically permanent life insurance, and more specifically like a dividend paying whole life insurance policy with a mutual insurance company. There's stock companies, which a lot of folks know about, AIG, Lincoln Financial, all those companies that are listed on the stock exchanges. And then there's lesser known insurance companies, mutual insurance companies that's been around since the 1950s, essentially. That have been incredibly profitable. They don't have to do anything risky or get involved in any risky behavior to drive up, to make their stock appetizing for the market to purchase. They could just manage operations in the benefit of their policyholders, which is their shareholders. So essentially what they do in family offices is they structure these life insurance policies specifically as a savings vehicle where you can position cash and capital in. And this is part essentially of the defense that they're playing. So why would they put it in a life insurance, policy was one of the questions that I had. Isn't there something else from a defensive standpoint that they can do? Well, the reason why they do it is, once a life insurance policy, and it's structured very specifically for cash value, for the savings element, the capital that you put in there is guaranteed. It's guaranteed to grow. And then also these companies pay out dividends because essentially you get to participate in the profits of the company as a shareholder, which is the policyholder. And this is all tax-free.
Now, MC, I'm gonna stop you and just ask you to compare versus what we're told with the 401ks, the IRAs, the mutual funds. You just said a word there, guaranteed, as compared to what we're told. Just give us the 2-minute drill. Really? Like, right?
Massive difference between savings, investing, and speculation. And then you could probably throw in a fourth one there, gambling. There's a huge difference. And I'm a stickler for terms because words are very powerful, and how you use words really could change your life. Here's a perfect example. Most people say, and not just Americans, around the world, they're saving for retirement in stocks, bonds, and mutual funds in their 401k or their IRA. So right there, if you look up the definition of savings, that's putting capital in a vehicle where the capital is guaranteed, and you have a very, very conservative growth on that capital. Where if you're investing, you're actually putting capital at risk. And you're putting it at risk in hope of getting a bigger return. Now, when you put capital at risk, you can lose all of it every single time. So it's a huge difference. And speculation is when someone is essentially trying to capitalize on, a trend. It's a very short-term kind of trading mentality. It's a speculative bet, maybe to bet that interest rates are going up or down and so forth. Maybe some folks did that even in, even in the crypto world. And then you have gambling, where most folks just don't know anything. It's like me walking into a table in a casino in Las Vegas to a roulette table, which I don't know anything about, and I'm just literally putting it on black or red, right? That's essentially gambling. And yes, I understand that there's professional gamblers with professional strategies. There's professional speculators that do very, very well speculating. There's professional investors. But yeah, there's a huge difference between this. And from a tax strategy standpoint, right? So in the life insurance, this is, again, the difference of mindset. So we have no control what taxes are going to be if we put money away. At best, I'm going to be very generous and say, let's just say we invest in a 401k with all these things. We have no control over what our tax liability will be in 10, 15, 20, 30, or 40 years. No idea. Nobody does, unless you're a soothsayer or you have a crystal ball. So what these families do is they pay their taxes now on the seed when they can control it and know exactly how much they need to pay, not on the harvest and when they have no control over it, and when they have no idea how much they're going to have to pay. So that's so again, to your point, it's a complete opposite of what everyone else is doing. So in a savings vehicle where they position their liquidity, I've heard a lot of folks say, well, I'm liquid, I'm in stocks. Well, you're going to have to sell those stocks, and you have no idea to determine what the price of those stocks are going to be when you sell it. It might be worth less than what you bought it for at that time. So, and you need a buyer for those stocks, by the way, too.
And it's a timing issue, right? Like, to your point. So when you put $100,000 in the stocks, let's say you got that much that you want to put in the markets, and you see an opportunity and you need $50K. What you're saying is you have to go sell $50K worth of stock. And depending on the timing of your opportunity and the stock price at that time, you may be down, you may be up, you may be breaking even, and you may have had it sitting there for the last 5 years. And now it's just at a lull and you need that cash for this other opportunity. It's all for naught, right? That 50K just sat stagnant in essence. And really with inflation, you're taking out less. So, the stock markets are not a good savings vehicle that's guaranteeing your wealth, as opposed to like these other strategies that with the life insurance.
And it's another game. Folks ask me if I've done any equities. The only equities that I've done in the past 15 years is actually a pre-IPO where I invested through a private placement in companies. And as soon as the stock went public, I sold it, because that's the game. That's where the real money is made. So again, these families will build companies and raise capital through private placements, and then have investors, and then take the company public. And at that stage, most people at that stage cash out. It's a liquidity event for folks. So it's very important, if you're going to play games, know the games that you're playing. And that's obviously a very useful strategy for a lot of folks, right? So because you get in very early into a company that then, let's just say through a couple of years, become very, very profitable, create products and services that the marketplace is salivating over, and then goes public. And then all of a sudden, there's a liquidity event for a lot of the holders of the stock. I mean, you pick your big IPOs. It happens every single time. So, know the game before you play it. And then back to the life insurance part of it too. So you have the savings vehicle, which is liquid. You can access the liquidity, the capital, the cash that's in there at any given point in time through collateralizing the cash value. So what does that mean? It essentially means the money that you've accumulated in there. Let's just say that's $100,000. You can access up to 90%, in some cases 95%, depending how you set up the credit line. But you can access it through placing that cash value as collateral and establishing a line of credit against that $100,000 that's in there. So what that means is that when you actually, let's just say, take the $90,000 in that example and put it in your business or invest in something, you still have that $100,000 growing tax-free in your life insurance policy. You have a line of credit established, and the interest rate now more or less is 4%, at which you can do it. But let's just say now you access that $90,000 at 4%, and you invested in a deal that's giving you 10, 12, 15%, and it generates cash flow. So now you can pay the credit line down with the cash flow. And eventually, if there's a liquidity event, you could do that too. And if there's any other windfalls in your economy, whether personal, business, or investing, you could just pay the credit line back down. What you then get is uninterrupted compounding in that bucket, tax-free. And of course, most people think of life insurance as a death benefit, and you have a death benefit. It's usually a multiple of the cash value that's in that life insurance policy. So compare this to a 401k and an IRA, at age 65, right? So you, in this life insurance vehicle, more or less how much capital and cash will be in there, tax-free. Where with a 401k and an IRA, no idea. No, because it's all invested in the market. And Let's just even hypothetically say you have $1 million in the life insurance policy, you have $1 million in your 401k and $1 million in your IRA. How much of that is yours when you start withdrawing from it? Well, in the life insurance, it's a full million. In the 401k and the IRA, we don't know. We have no idea. And of course, most folks don't think about this, but these families do, because they think really multi-generationally. So they think, if I pass away at age 65, and let's just say there was $1 million in there, how much do you get with a 401k and an IRA, your beneficiaries or your estate? Well, again, we don't know because they have to pay taxes. But let's just even be very generous and say they will get $1 million. Well, with the life insurance, there's a death benefit that's a multiple of that $1 million, which in some cases could be, it could be 2 million or it could be 3 million. That's passed tax-free to the beneficiaries or your estate. And then, it's a private contract. These life insurance companies, it's a private contract between you and the life insurance carrier. These credit lines, if you establish it with a carrier, doesn't go on a credit report. There's no credit check being done for you to access that. You have access to your money at that stage, right? Or for
it's collateralized by itself. It in itself collateralizes it.
Exactly. Exactly. And I mean, this is what they do in family offices. There's actually a strategy that the Rockefeller family implements and executes, and a lot of people call it the Rockefeller Method. But essentially, all the family members have life insurance policies on them. This is before they can access any capital from the family bank, which is part of this family office. And the family bank is obviously established through different vehicles, the life insurance being one of them. Now, think about it for a second. With every generation, the wealth of the family actually grows because they kept the money together, the capital, and they also have this life insurance strategy where they're going to have great stewards of capital, right? Because a big part of family offices is trying to transfer intellectual capital with not just the financial capital. The financial capital is actually the easy part of all of this, right? But the intellectual capital transfer is going to result in some great stewards of capital. But of course, you're going to have, you're going to have one or two family members that are not going to be good stewards of capital. They are going to buy really, really like flat cars and massive houses and all that kind of stuff. But essentially, they'll pass away. There'll be a death benefit paid out to the family's estate, and which at that stage they will be made whole, and the family's wealth would even grow. So there's certain things that you could do to protect your heirs and protect the family's capital in the future, even if you're no longer here. So it's a very, very powerful strategy. And again, these families access capital to grow their businesses from these life insurance policies, and then also grow their investments. So it's a very powerful cash flow strategy. A lot of folks have probably heard of it through, a HELOC is essentially a collateralization strategy where the home equity can be accessed through a credit line. You could do the same thing with stocks. Asset-based lending, ABL loans is very, very popular. You could do the same thing with gold, silver, and art with certain custodians. I think, there's a couple of private banks that allows private banking clients to do that. And then also with crypto, and then of course life insurance. I've done the gold and silver. I've done some crypto collateralization. I've done HELOCs in the past, but my favorite one is the life insurance one because of the foundational piece, the guarantees. There's not too many moving parts. It's essentially the boring part of all of this, because just think of all the other elements in your wealth strategy. So you want to have it on pretty rock solid foundation, so that's been pretty incredible to see how life insurance is used in those families too. And again, I say to folks, if you hear this and you feel, oh, but do I need to be a Rockefeller to do this? I always say you do not need to be a Rockefeller to do what the Rockefellers do. You could do it on a very small scale in your own personal business and investing economy, and it's going to make a huge difference.
Yeah, I was fortunate enough as well when I was 20. Because am I wrong to say these are whole life policies? Am I misspeaking?
These are whole life policies,
right,
structured a very specific way.
Right.
A lot of folks are probably familiar with Dave Ramsey and Susie Orman and how they dislike these policies. And what I say to folks is, that's how, again, unfortunately, this is how the world works. That's how most of the folks buy life insurance. It's retail. It's terrible.
Yeah.
I agree with 99% of what Dave Ramsey says about, how whole life is sold to the general public. But Dave then doesn't address the issue of why do family offices buy as many of these policies as they can? Why do corporations buy as much as that they can? They structure executive comp packages for CEOs. The majority of CEOs in a lot of these corporations, they don't walk away with 401ks and IRAs. They have executive comp packages, which this is essentially used to structure those executive comp packages. And then, of course, banks. Banks buy as much as these life insurance policies as they can for their cash reserves, their tier 1 capital, which is just called BOLI. So bank-owned life insurance, and on the corporate side, it's called COLI, corporate-owned life insurance. So you have to look at, there's always many different sides of a story, and of any sort of anything that you approach, whether it's real estate, whether it's, the stock market, whether it's life insurance, you have to be aware of the game, how the game is played, and the different strategies in the game.
Well, and what I was going to say was, like, I was fortunate enough to get positioned in one of these at 20 years old. I was a young corporal in the Marine Corps. Someone like our major, I think, got caught up on learning about this, brought someone in. And I got, look, premium wise, young, dumb, didn't know any better. I ended up getting it. It was like $100 a month. But and so I want to speak to like the inexpense that it could be, right? Because we were throwing big names, Rockefellers, whatever.
Yep.
But, it was a guaranteed 6%, so over the last now, how many years ago, it's been 20 years that those premiums or whatever have been growing at a guaranteed, find a guaranteed 6% somewhere, right? Like in these more what you're told to do vehicles, you're going to be hard pressed to find it. So, I just say that to kind of affirm what you're just saying is that it does, this is a foundational piece. And again, true opportunity for savings if you have a bit of, the patience to understand how this works and understanding, as opposed to, like, say, more, and I'm going to use the word that's proper, the other products that you're sold, right? When these brokerages or whatever, they're selling you on their product base. And again, probably not enough time in a day to explain the fact that they're making more money on your money than you are, in some of these product platforms out there. So like you said, it's a whole different, understanding and perspective of the opportunities out there that we aren't really taught, which, again, back to my appreciation for, knowing some of this, but also still yet continue to learn more every day from you and kind of in this world and these opportunities. You wrote a book, right, called The 21 Best Cashflow Niches. What inspired you to write that, and what are some of the cash flow niches to take on?
Yeah, so it was the number one question I was asked. I started my podcast in 2016, and the number one question was, MC, you've interviewed, the best minds in business and investing. What are some of the most interesting investment ideas or opportunities that folks have shared on your show? And this kept coming up. And eventually I started to, think that this might be great to write a book about it. So I contacted a friend. He is a best-selling author. And I said, I've got this book, the idea for a book. And his response was, have you written that book? And I said, no. He said, I don't understand why not. So I said, okay, well, that gives me justification that I should do this. But it came at a really good time too, because I feel like from a cash flow perspective, especially where we are right now, right? There's so many cycles that we track. We track economic cycles, market cycles. You could track empire cycles. There's a lot of different cycles that you could look at, and they're sort of all of them converging right now, which brings it kind of full circle of how I started this conversation, that I grew up during times of uncertainty, times of massive disruption, changes, chaos. And we're seeing that. We've seen that since 2020. So a lot of folks have asked me for solutions, like, what do I do in a world that is so full of uncertainty, unpredictability? How do you get security in a world like this? So as from a strategic point of view, a strategy, which, by the way, I love that you said, product versus strategy, because most people are just sold products. They don't think strategically or strategy. So from a strategy standpoint, one of the things that we've shared is you have to have diversified income sources, because nobody has a crystal ball. No one's a soothsayer that I'm aware of in my network. So what does the future hold? Well, there's high probability of certain things that we could see and can see play out, but no one really knows. So you want to have as many different income streams as possible. So we shared some of these cash flow niches for folks as an idea to start researching, different cash flow niches and add some of those. And those have been great. I mean, most folks know about multifamily real estate. Most folks know about energy. Oil and gas has been great. Bitcoin mining has been a great cash flow strategy. There's a lot of great ones. One of the ones that I shared in the book too, again, comes back to the family offices, where there was this agricultural niche, and there's many different agricultural niche, right? That's pretty broad. But the one I found was fascinating, and it was actually timber, and more specifically teak. And I thought, this is very interesting stuff. And then I started to research it, and I'd interview a guest talking about it on the show, and I started to see that, wow, there's some big families, and people like Ted Turner, founder of CNN, endowments of universities, Ivy League schools, that are all invested in this specific niche of timber, and more specifically teak. And I was very intrigued. So I called that friend of mine at the family office and I said, is this kind of a thing in the family offices? Have you seen this? And he goes, oh, it's a thing. They're big on teak investments. And I said, this is incredible. Why? He said, well, just think about it. What did trees do in 2019? Well, they just grew. In 2020, they just grew. They didn't get the memo of all the craziness that happened in 2020. They just grew. The same thing in 2021, the same thing in 2022, the same thing 50 years ago. And it's essentially, quote unquote, a commodity, a hard asset. And it's a upscale commodity used for upscale furniture and so forth. But there's commodities have been beneficiaries of inflation. So it tracks inflation. It just does what it's supposed to do. It grows and it produces incredible cash flow. And it's sort of a legacy play too. It's on land. And of course, this is something that could be transferred from one generation to the other generation and down the line, and nothing's going to change that much. And I thought this is fascinating. And one of the things that he shared too is just think about it. You always have to think about how to balance out a portfolio or your strategy. So you might have, real estate and oil and gas and Bitcoin mining and so forth. You have all these other businesses that you might be invested in. But how do you balance this out? How do you get sort of a stabilizing cash flow niche that stabilizes more riskier cash flow niches? Well, that's what it does in their overall portfolio. So I thought that was fascinating. Another one that I added in there too in the book, which is also kind of a similar along that line of thinking, is music royalties. It just blew me away, because if you think about it, what happens when people are sad? Well, they probably listen to some music sometimes, have a glass of wine just to relax. What happens when they're happy? Well, they play very, very happy music. Music is something that is enjoyed regardless of the economic cycle. And there's actually a lot of artists, famous artists, that actually sells off a portion, and sometimes up to 50% of the royalties that they have on certain songs and certain albums. Now, why would they do that? Well, a lot of them are trying to raise capital for their next album and their next project, and they didn't want outside investors again, or maybe a record label and so forth. So it's incredible. I mean, if you just look into what happened to Michael Jackson's estate and Michael Jackson's royalties, after he passed, it's just incredible that there was a ton of investors that actually bought some of his royalties. So there's there's platforms that you can purchase and invest in these music royalties. And again, it's an interesting kind of play, because it's another one of these cash flow niches that's a kind of a stabilizing factor. But yeah, it was a lot of fun. It was, going down memory lane, because on my show I cover everything, real estate, businesses, paper assets. We covered crypto and blockchain technologies. We covered commodities. We've covered so many things. So it was great to go down to memory lane and share some of the best cash flow niches that have been shared on the show.
Yeah, no, it's awesome. And the book, like I said, is the 21 best cash flow niches. And we'll have a link for it in the show notes, but for you guys to check it out and what some of them are and how you can invest in them. I guess, MC, like, who's been the most influential person in your life, kind of, as far as whether it's this or attributed to your success or perspective?
Yeah, it's definitely my mom and my dad. For my parents, and obviously my wife and my children are incredible right now. But that's actually where the Cashflow Ninja comes from. So my dad is a martial artist, and a pretty well-known martial artist. He used to travel 6 to 8 countries annually and just teach traditional Okinawan karate all around the world. And one of the biggest lessons that I learned from him is he pursues excellence in his craft daily. So he's 74 years old, right? He gets up every day and he still tries to get better. I mean, he's a ninth Dan, very, 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 well known in the martial arts, especially in that niche world, all across the world. But he has never arrived in excellence. Nelson Nash wrote the book Becoming Your Own Banker, talked about the arrival syndrome, where he used the example of, people finish college and they go, oh, that's it. I know everything I need to know. I've arrived in knowledge. And this is one of the things for my dad is he pursues still excellence in his craft daily. So what I try to do as a business owner and as an investor is I just try to pursue excellence in my craft every day. I try to get better, a little bit better every single day. And, when you do that, you are leveraging, some universal laws, which we don't get to choose if if they affect us or not. They do, the law of compounding. So most people just think of the law of compounding as compounding money or interest and so forth, but compounding efforts over time, I mean, it's incredible, the hockey stick growth that you can get. So that's kind of like one of the big takeaways, and that's where the ninja comes from, from cash flow. It's just pursuing excellence in our craft as business owners and investors daily.
Yeah, I love it. I love it. The overall, everything you've learned or done so far, at least, what are you most proud of?
I think, wow, it's a great question. I think from a family standpoint, I'm just extremely, just blessed for the family life that we have. And that is as a result of, the pursuit of the vision of sovereignty, and being a free and sovereign individual. I think that is one of the things that'll move the needle in most areas of your life. The vision that you have for your life, regardless of what area it is, once you become a free and sovereign individual, it has a massive impact on that. And I think most people have started to realize that. I've had these conversations with a lot of people, and since 2020, this was really something that hit them really hard. That they were very successful. They maybe did really well in their businesses, maybe that they did well in their investments, but they didn't realize really what the meaning of freedom was until, let's just say 2020, or how that affected how they weren't really as independent as they thought they were. They weren't really as sovereign. So that's the main thing I think that I'm very, very proud of is to, and again, I bring the same mindset to everything else that I do, that I pursue excellence in that too. So to be from a freedom standpoint and sovereignty. Are there things that you could do a little bit better every day? Absolutely. Especially when it comes to sovereignty. If folks really start to think about all the things that we're dependent on, and I know we talk about business and we talk about wealth and financial freedom and freedom of just money, time, relationships, location, purpose. But sovereignty is huge. If you think about the things that we take for granted every day, we flip on a switch and a light goes on. We open up a tap and water comes out. And growing up in South Africa, I've had the opportunity to see what challenges you will have if you're not sovereign in those areas. And I'll give listeners an example. So they have had energy shortages now probably for 1.5 decades in South Africa. So they have this concept of load shedding is what they're experiencing. It's rolling blackouts, essentially. So for a large part of your day, you don't have electricity in certain areas of that country. Now, you're going to become really, really sovereign very, very quickly if that affects you. Imagine where you live today and you don't have power or electricity for 8 hours a day. Now, all of a sudden, you're going to focus on becoming as independent as you can from the system, from energy standpoint. Have solar. You're going to figure out what you could do with regards of water. You're going to figure out what you're going to do with regards of protecting yourself and your family, be in great physical shape, have a home defense plan. Because, believe it or not, shocker, when the electricity goes down, there's undesirable characters that are opportunists at that point that'll try to capitalize on the situation. So that's been a big part of it, is try to be, I'm proud of that. And it's, can I get better? Is it a full, complete, work? No, it's not. It's anything but that, but it's something that I work towards every day too. But that has allowed us to do a lot of things. It's allowed our family to have the family life that we have, to do the things that we love as a family, and being essentially, free and doing what we want, where we want, with who we want, and living in our purpose.
Yeah. And because I think a lot of people mistake, to the point, right, this perspective, they when you say personal freedom, they automatically jump to like lifestyles of the rich and famous, right? The big house, the fancy car, the big boat. I have learned, and you tell me if you feel any different, but that's another form of slavery, because you're enslaved by the necessity to maintain those things, right? I mean,
absolutely. And by the way, to your point, some of the wealthiest folks that I know, folks must maybe have heard the saying, real money sleeps, is what a lot of folks, right. And they do. And to your point, that is, it draws you kind of into that status kind of game, which is, in my worldview, also another form of slavery. There's a lot of folks that make a lot of money, capital in their businesses, but they chase that. So they're not free financially, and they're also definitely not sovereign. So you have the power grid go down, which affects water everywhere. So water and electricity. Now all of a sudden, what shape you're in. So it takes on a whole different meaning once you get to once you see the entire picture, I guess, because most of us see little bits of the picture, and there's still many different pieces of the picture that I'm looking for, because I'm sure there's a lot that I'm still yet to uncover. But once you start to see the puzzle kind of form, you kind of start to see that's just, to your point, another form of slavery.
Yeah, it's so, and it's not about the things. Like, our greatest asset is our time, right? So personal freedom, that sovereignty that you describe, is really about your ability to do what you want with your time, and that's the real. It's not your. And I love, people throw on like this net worth thing a lot. It's like, net worth, maybe it's a place, it's a balance sheet, it's a number. But, are you free with your time? Because you can be net worth 10 million, but if you got to put in 80 hours a week to sustain that, or whatever, however you leverage yourself, you're not free. Sure, your net worth is awesome, but you're not free. So it's a great, once you start kind of getting this game and kind of starting to, I'll say, even mature through, this consumerism that we've been kind of sold for all of my life, I know, and finally kind of getting my head, seeing the forest for the trees, so to speak, and that whole game, consumerism, and like we mentioned earlier, like what you're sold versus, I don't know, this idea of what true sovereignty is. It's, you start to get a little bit more at peace too, I think, when you start to break into these areas and kind of have this type of clarity, financially, sovereignty, et cetera. So, and I always appreciate these conversations with you and on these topics. So what's exciting that you're working on now?
Yeah, so we're building out our community, which is, and continue to build it out at cashflowninja.com. So what's in the works is a second book, and then also a newsletter. So a lot of folks have reached out to us after reading the 21 Best Cashflow Niches, and they said, you've put, and by the spoiler alert, there's 5 bonus ones in the book, so there's 26 that we cover. And they said, that's great, but there's all these new ones that keep coming up consistently. Are you going to write a second book about that? Or, are you going to write a newsletter, putting those out? And I'm like, well, this definitely could be something that we could put in a newsletter, because we're always researching new things and learning new things. And, since the book was put out over the past year, there's about 12 to 15 additional ones that probably would have made the book, or would go into a second one. So that's something we're working on as well. Folks can always see what we're up to. We share everything at cashflowninja.com. But yeah, there's a lot of exciting things going on. And to your point on the sovereign conversation, there's a lot of people that have reached out to us about that too, having those conversations and putting something together. So we're looking at what we can do there, because I think it's hit a nerve with a lot of folks. I think there's a lot of people trying to figure out, how do I become more sovereign, and how do I essentially become less dependent on falling systems that we've all just taken it for granted our entire life, right?
Yeah,
and
there it is.
At the time of recording, a great example is, you'd never thought you'd see it in Europe, or in Western Europe especially, but there's a massive energy crisis there. There's a massive energy crisis happening in California right now. So all of a sudden, these themes are starting to come up. So it's something that we definitely are looking into, and how we can, put something together for folks too.
Yeah, I mean, to scare everyone, to wrap this thing up, right? Like you mentioned earlier, like everything you went through growing up in South Africa during those hard times. And I mean, I got to ask, man, like, are your spidey senses tingling with the world today, or what?
I feel like I'm reliving, a lot of what I've already experienced in my life, and that's the other thing that I'm very passionate about right now, is I feel like, because I've seen a lot already, what folks are experiencing now, I kind of have an idea of where things are going and what comes next. And we've been able to help a lot of folks. And just share. We talk about it on our podcast. We have conversations about certain topics that plugs into this. But yeah, I feel like I'm in a position where I can share and draw from my experience to help a lot of other people prepare for what's coming, because there's a lot of folks that are going to be really caught off guard. And then there's a lot of folks that do understand what's coming, do understand what's going on, and are going to position themselves, their family, their businesses, and their investments to be on the right side of the chaos, and put themselves on the right side of one of the biggest wealth transfers in human history. I know it sounds like a cliche when I say that, but we've already seen it since 2020. If you look at the numbers and the statistics of where capital is flowing to and where it's flowing from, it would shock a lot of people. And it's only going to accelerate, I feel like, in the next 18 to 24 months. So it's going to be interesting. But yeah, I'm very passionate about that topic too, because I feel I can help a lot of folks. I kind of say I'm comfortable being uncomfortable, and living through this. So I'm very, very fortunate to be in a position to just share with folks, and try to help as many people as we can.
Yeah, man. No, and I appreciate you. And like I say, I do enjoy every time I get to talk to you about this stuff. So real quick, I know you said a couple of times, but where can people connect with you? Where they find you online?
Cashflowninja.com. And if you're interested in exploring how to set up your banking system and create your own banking system, we have a webinar available. It's at yourownbankingsystem.com, yourownbankingsystem.com.
Yeah, check it out. So Cashflow Ninja and MC, it's been an honor to have you on. I like say appreciate you coming on, sharing your story and all your experience, and tons of insights here. A lot for people to dive into, but definitely go check out MC's podcast. And if you've got the opportunity, get with him. Because the infinite banking strategies and these other things are worth knowing. This isn't an advisory, thing or anything like that, but the awareness and clarity of what these opportunities are, the knowledge in itself will always serve you. So MC, hey man, thanks for coming on. It's been great to have you today.
Awesome. Appreciate you.
All right, Summer, talk soon.